Hey everybody, Boris. Welcome to the crosses section for Sep 26 to Sep 30 of 2016. Crosses are actually, I think, to me, the most interesting trade this whole week because we don't have a lot of directional data from the majors, and I think a lot of the primary action is actually the most interesting action is going to be in the crosses. And to that end, there's a lot of, I think, interesting play both ways in the Kiwi dollar, definitely in the dollar CAD. It's really sort of a story in the commodity sector, I think, that's going to be most interesting as far as the crosses go. On the movement side, let's just take a look at some of the ideas that I have in front of you, and we'll discuss the charts in a second. My first idea that I think is quite interesting here is this continuation of the pound weakness. And this time, the pound weakness, I think, could express itself best against the Kiwi dollar. The Kiwi dollar has been weaker than all the other commodity dollars, or at least the Aussie dollar, for most of this week on the dovish RBNZ. But now there may be a time for a little bit of risk of mean reversion, where the Kiwi finds a bid, and the pound still remains to be, in my opinion, the weakest of all the majors because of all the Brexit concerns. So resistance here comes in at 180. Support can go all the way down to 176. There's still a lot of scope to the downside, and I think that trade could have further downside action as the week continues. The trade to the upside that's been very strong, we've been talking about this actually, both Kiwi CAD and Aussie CAD for the last couple of weeks. The weakness in the CAD has definitely played itself out. We're now above parity with the Australian dollar. But the true resist here, and this is where it gets interesting, is around the 101 area. That's very close to where we're at. So there's just a little bit more, I think, squeeze to the upside on the Aussie CAD possibility. As far as the downside goes, support is very strong at this 99.50 level. To me, this is a breakout above parity. Any kind of a dip here, I really want to be a buyer. I like the Aussie CAD to the upside because I still think the weakness in the Canadian dollar is going to be pretty pronounced. The only thing that could really scuttle this trade very badly is a massive breakout to the upside in oil, and that's highly unlikely. So this trade, very clear breakout to the upside that I think just basically commands any kind of a buy to dip trade that you have in the move. And the last idea is just the Aussie Kiwi move, which reversed very violently to the upside last week. You know, we talked about the idea that 102 just could not be broken to the downside. Usually, when that happens, the reverse happens, and it's exactly what we had happening, which is that the Kiwi had serious corrective move after the RBNZ. After the RBNZ announcement on Wednesday, but having now come back up from 02 to all the way above 105, we're facing this big resistance at 06, and I think that this week is going to be the week where the Aussie Kiwi trade gets adjusted to the other side, where mean reversion really comes into play, with Aussie holding bid and with Kiwi holding bid and Aussie perhaps finding a little bit more corrective mode here. So let's take a look at the charts here and see where everything's there. So let's first start with the pound Kiwi, and we can see that the 180 is a clear big resist point, and there is a lot of downside here all the way down to 176. I think it'd be better and more clear if we could just take a look at the hourly chart. And you see the 79.50 is actually the bigger resist point, but with the 180.50. So 79.50, 180.50 on a more granular chart is really where we have the bigger resistance points here. And the downside move really opens its way very much towards 76.50 as a possible double bottom test support. So that to me, the weakness of pound expressed against the Kiwi could be a very interesting trade as we go forward. Now the second trade, let me just go back to the dailies for just 1 second. The second trade idea was the Aussie CAD that did break out very nicely above parity. We've tested parity, now we broke out, closed above parity. So now a retest of parity, probably a very interesting buy here, with ultimately a move here towards the 101s. 101s, of course, is going to present a very serious resistance point because that's going to be a double top formation. So you don't have, it's not a huge trade, but it's also generally a very low volatility trade. I mean, it's not a trade that moves more than 50, 60 points a week, much less, a day. So I think it's one of those kind of quiet, but possibly very interesting trades to the upside. Certainly very strong upside trend here all the way through. And the corrective move here should be quite small. So anywhere close to parity probably is going to represent a very interesting buy point with ultimately move towards the 101s. A much deeper, stronger break here. Let me just go like on a 3-year chart. Really, this is the weeklies, and we really don't have any highs above the 101s for the last 3 years. Let me just see if I could just zoom out here. Yeah, all the way until 2014. where 102 is pretty much the maximum level. Parity is the equilibrium point between Aussie and Kiwi, but with oil prices suppressed, with the Canadian economy still in a very, very low funk, and we do have Canadian data this week, it's possible that I think we could push ourselves certainly to 101. Pushing ourselves to 102 could be a big stretch, but clearly to me that the move here is to the upside, and you do want to buy any kind of retrace because the upside here, the breakout here and the trend here is very clear to the upside. And then the last idea I have, and we probably have to go back to the dailies here. Well, this is a very big reversal, right? I mean, we tested the 103s. We talked about this. The 103 just couldn't break to the downside. Big, big reversal. So the key question here is, are we going to really push hard and high towards the 107s? Are we going to flame out around the 106s? Either way, I like the trade of shorting at the 106s because, I'm very, very confident it's going to turn at 107s anyways. So if you want to get early, get into 106s, scale up to 107s with a 108 hard stop. That would be the hard stop on the move. But I definitely think that the potential here for readjustment back down towards the Kiwi is very much in play. And so this is one of those, in my opinion, higher probability setups here with scale up into this very big resist point and a turn back down. May not be a big turn back down, but a high degree of confidence that we have a chance here possibly to make 104 in the next week and a half. So that's how it sets up. It's all really sort of a pro-Kiwi, pro-Aussie trade this week, depending on how you want to structure it. I wish you guys the best of luck, the best of trading. I definitely think the calm dollars and the crosses is the action in a very, very quiet week. Otherwise, as far as the economic calendar goes. Boris, over and out.